Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Oh, g'day, how you going? Phil Tarrant, host of the Smart Property Investment Show, recording our 10th year of property investment podcasts, which is all the rage. It's a badge of honour these days to have a podcast. It's like it was 15 years ago when everyone was racing to get a website. Now everyone's racing to get a property podcast. So it's good for investors and people in and around property. Lots of information out there. Trying to navigate which ones to listen to are probably the tough ones. So if you're tuning into this, you make the right decision. There you go. You like what I did right there. But if you do like what we're doing, and I get in trouble from our producers all the time for not asking for reviews and 5-star reviews, obviously. So if you don't mind sort of doing that and helping us out, and wherever you listen to this, whether it's on Spotify or it's on Apple Podcast, let us know what you like, what we're doing. I get the good bit of this job, that's sitting behind the microphone talking to people about property, but it's a big team here that do a lot of the heavy lifting around it all. So a favour for me, if you could do that, that would be great. But today we're going to get stuck into regional investing, and it's something which I've been keeping a very close eye on. It's something which I'm paying a lot more attention to. Catalyst of that has been just some of the numbers coming out of the most recently released Fast 50 report for this year, which is where to put your money today for the best capital growth in 2026. There's going to be a whole bunch of podcasts coming downstream on this shortly, but it was a fair representation from regional markets. And one of the reasons why is that regional markets do provide good value for the right investor at the right time, but often the price point allows for investors to enter that market potentially versus metropolitan markets. So lots of things to chat through today. And to help me with this, I've actually got a finalist 2 years in a row of the REB Awards for Buyer's Agent of the Year. That's 2023 and 2024. Ben Plohl from BFP Property Group. I've been nervous about saying your name. Did I get it right?
Oh, you're close. Yeah, Ben Plohl. It's a tough one.
It is.
I'll give it.
It's really funny. Like I don't know if you've got and you're the sort of founder principal buyer's agent over at BFP, and that's obviously an acronym for your
It
name.
is, yeah. Very creative.
Very creative. It's one thing you want from your buyer's agent is a level of creativity as required. But I don't know if there's any words, like there's certain words with the English language or certain sounds sometimes I struggle with and I can never get around it. Like I still struggle to say the word trajectory. Like it's really weird.
Yeah. Well, I think the problem with our surname is there's too many letters that shouldn't be next to each other. It's a tough one.
Plohl.
Yeah, and I've had many variants over the years.
I bet you. What was your Aussie born and bred?
Yes, yeah.
My background from Europe somewhere.
Yeah, my dad was born in Slovenia, so
okay.
That's where the name
It
comes
from. What'd you get called at school?
Oh,
with
look,
Plohl. You must have. There, look, that was pretty good.
Multiple variations, that's for sure.
That's good. Well, thanks for coming in. Your name's Benjamin. I can call you Ben. That's all right. Yep.
Yeah, perfect.
That's sweet. How long you been sort of doing this buyer's agent thing for?
Yeah, so we started in 2018.
Okay.
So we're coming up to our 6th or 7th year.
It's a good innings. So pre-COVID.
Pre-COVID, yeah.
Pre-COVID.
COVID was a tough time, but yeah, no, we've been around for some time. But personally investing since I was 18. So
okay.
I'm 40 this year.
There you go.
So been doing it personally for quite some time.
22 years in the game. So give me a sense of your portfolio then, if you've been at it. No doubt time's been a trusted ally for you, but what's your sort of personal portfolio looking like?
Yeah, it's in that sort of 10 mil range,
Yeah,
spread across 4 states. So Adelaide, Brizzy, Tassie, soon to be another one up in regional New South Wales, and then the family home here in Sydney.
So you started investing comparatively early, so you must have had a job of some sort before you were a buyer's agent. What was the career prior to property?
Yeah, so straight out of school went into finance accounting, so qualified as a chartered accountant. Did that for a good 10 years or so, worked up to the CFO level for a whole bunch of businesses here in Sydney, and had a stint overseas. So, corporate sort of finance gig.
Corporate accounting. Did that get sort of old pretty quickly and you're still looking for someone else?
It's a cutthroat industry, right? We were working in a private equity owned business, my last gig. So we sold that business, and I had the marching orders, and it was a matter of thinking about what I should do next. And prior to establishing BFP, I'd used one particular buyer's agent for a number of transactions. One of the guests on your show, but I think probably throughout that process, it was about really understanding the benefits of what someone can, a BA can do for someone like myself at that time, being in corporate and time poor and just leveraging off the experience.
Yeah, it's the sort of existing buyer's agents, a great incubator for new buyer's agents. You find most buyer's agents come out of being a property investor. They get introduced to it through being a professional, and then they use them and they go, hang on a second, their job looks better than the job I've currently got. I might go and do that, which is a great way to grow the sector.
100%. Yeah, 100%. It was about a means to an end in terms of, yes, you want to invest, you've got the capacity, it's more the time and I guess the interest to really pinpoint where you should be going and how to build out that portfolio. So fortunate now to be in the position of just advising clients on how to do it and do it right and
so you'll never look back. You don't think you'll go back in a corporate world?
No, definitely
probably
not.
unemployable now.
It's probably true.
I am. I don't know if
AI's probably taking my job.
You'd think so, right? But it's funny your observations on private equity. There's a lot of glitz and glamour around it. People want to chase it, but pretty much every single person I've spoken to has had a relationship with it in some capacity.
It takes a special person.
It takes a special person, but to be fair to private equity, they know what outcome they want, and they'll be aggressively focused on ensuring that outcome largely is delivered because
100%.
They've got people they've got to return their dough to who are expecting an upside, and they typically got a bit of skin in the game themselves, so they're all on an upside. So there's a lot property investors could learn from sort of private equity. Maybe we're going to do a thing on this, and if you don't understand how private equity work, but they're there to get a return, and every single property investor I know is there for a reason. And you still hear these ideas of like, why do you invest in property? I just love property. And you go, well, what do you love about property? Often people struggle to articulate what they actually love about property. I don't love property. I think it's a great vehicle for creating wealth. I like the outcome that it gives me, but
I'm probably the same, right? I don't lurch around, Facebook groups where people just talk about property day in, day out. I think it's a vehicle to creating wealth, but you don't really get deeply invested in, the anything but the outcome. So, which is a tough one when you're working with clients. There's always a bit of emotion involved, but I think you really got to take that helicopter view of what are you here to achieve and map out that plan to get there.
And do you think being an accountant by trade is a real enabler on that basis, or sometimes it an inhibitor? Because I know a lot of very successful property investors who are accountants. However, I know a lot of other accountants that don't invest in property because it's a mindset type thing for them.
Yeah.
How do you find it? How do you sort of balance a ledger on leveraging your accounting capabilities in property investment?
I think it's the analytical ability to really sort of understand how to build out that portfolio. Understanding cash flow is super important for any investor. Understand how to decipher data points and understand how a trend works and all that kind of good stuff. I think is crucial. I think as an accountant, it's definitely helped and probably put me ahead of the game in terms of how to manage a business. That's for sure. But I guess as an investor, there's definitely some crossovers and some value that we would have learned as we were trained years ago.
Yeah. Are you able to get beyond the numbers? And the numbers are very important. They can tell a lot of tales, but to actually let the creativity of identifying locations and sort of the narrative and the colour that emerges through it, which you might not necessarily see in the numbers sometimes. How do you sort of embrace that?
Yeah, I guess for when I invest, it's all very much having a very sharp economic lens, right? So looking at these, which we're going to talk about regional locations today, it's got to the economics of these particular cities must make sense. So I think the ability as an accountant to understand economic drivers, understand what pushes growth in a market or in an economy, how that interrelates with unemployment rates and job creation, all that kind of stuff, really important when investing in the region. So I think that ability to really get that is definitely important. And
do you do your own tax?
No, definitely not. I think I gave that away about 10 years ago as well. So
you're a smart accountant, get some other accountant.
Absolutely, yeah.
So. I know some of the best property investor accountants I know, get someone else to do their tax
100%,
right?
yeah. So
and you're probably better off.
Yeah, work with a pretty smart and savvy property investment focused accountant, which does definitely help.
Yeah, no, it certainly does. And creating a BFP property group. Tell me about the first day. Did you leave a job and start a job, or did you have a break? Did you sort of incubate the idea for a little while? Like what was the sort of the cadence of the shift into being a self-employed business person?
Yeah, it's funny. So I left the private equity-owned healthcare business that I was a CFO for, and went into a venture capital-backed startup in the property space.
Wow.
So as a consultant, so I floated around, working kind of 3 to 4 days with the founders of that business for I think it was a 3 to 4 month window. I guess at that time it allowed me the opportunity to really craft a business plan and really get your ducks in a line. And that contract then came to an end, and then it was full time. And I still remember we'd had our second daughter at the time. I think my wife was pretty stressed, to saying, well, you've gone from a pretty good corporate salary to literally nothing. But I think it you've got to draw the line in the sand somewhere. You've got to commit, and that's what we did. And you back yourself. And I'm not sure if it's on your notes, but the first 2 clients that I ever attracted to this business was because I was on a podcast on your show
really?
7 years ago. Yeah.
I didn't know that.
Yeah, so I come on as an investor,
Okay.
and my first 2 clients were from that podcast.
Well, they just contacted you saying, hey, I
Absolutely.
like you as a property investor. You went, I'm actually thinking about being a buyer.
100%, yeah. So I think 7 years ago it was a very different landscape. Podcast was probably the main, I guess, resource for investors at the time.
Yeah.
No real Facebook groups or anything like that. So the phone rang, and then it was you get that 1, you get that 2, you do a great job.
Yeah.
They get great results, and it sort of compounds from there. So
That's good to hear.
yeah.
That's really cool. You still know these first
Absolutely,
clients,
good clients that we've they were 2 brothers, and we've worked with them a number of times, since that time, and
There you go.
that's sort of referred on families and friends, and it's compounded from there. So, it's been a great journey, but I think we're sort of it's that slow, sustainable growth is what we're after. Nothing, it's nothing to really set the lights out on fire. It's just doing the right thing by the client. Getting great outcomes is really, a big part of what we do, and just helping people with honest advice around building out portfolios. So
Yeah, having watched the emergence and I would say rapid growth of the buyer's agent sector in Australia, you're essentially getting 2 pools of buyer's agency, if I can generalise for a moment. You have quite a lot of above the line groups who are charging forward to try and build huge scale and big engines and everything connected with it. And then you've got this another cohort, and I think just listening to you there, Ben, you'd certainly fall into this bucket, is more methodical, considered, boutique orientated, consultant orientated,
non-scalable business. That's what I run.
but like where you're really buying the person,
100%.
Yes. and you're buying, and which means there's bandwidth restrictions on that. However, you're buying the person and the connectivity with them and the communication capability with them, which really appeals to a lot. I'm finding that really appeals to a lot of people. Might not be all the sort of glitz and glamour and the flashing sort of signs and stuff, but it's the highly connected and engaged relationship, and that seems to appeal to a lot of people.
100%, and that's that's the differentiator in terms of there's some phenomenal operators in our industry, but the clients that come and work with us are the ones that will have that sort of one-on-one with myself. Yes, we've got a team that support acquisitions, etc. But you book in a call on our website, you'll chat to me. There's no sort of funnel that you'll go through. We have a good conversation. You come on board, then you have that strategy session with myself. So it's like I say, it's a non-scalable business because I can't be everywhere. So we do have to compact and sort of make sure that we don't work with everybody. But I think with the clients that do come on board, they come on board and they really appreciate that sort of level of service. And
is there a particular type of client that sort of, I know I want to get into regional investing, but I'm quite curious about this. Is there a particular type of client that is attracted to you? I know it's that every investor comes in all shapes and sizes, but are they people like you, the guy you were back when you were a corporate guy?
Yeah. Look, I'd say 60-70% are similar to myself, or my wife, she was in law as well. So we kind of attract that type of client, be it a finance executive or a business owner, or mid to higher income earning families. But then there's also a growing trend of, that sort of first-time investor that really needs to be nurtured. So we're starting to see a bit of a trend in that sort of, type of client that's coming on board as well. But I'd still say, bulk of them would be, similar to what I was.
We did
seven years ago.
a sort of reader survey or a viewer survey for SPI recently, and it was really good sort of catch up for me to recalibrate my sort of just views and observations towards property investors. Because you end up in this bubble, right, where you think investors are a certain type of people. That's really the fringe cases, right? Most property investors in Australia are exactly those people you spoke about. They're sort of middle-ish income, some of the higher income, family-orientated people on a journey who are at a point in life where they're thinking about what the future looks like, and therefore they want to start investing in property or expanding their portfolio on the basis that they don't want to work forever, right? Like really, really simple. They're not chasing 10, 20, 30, 40, 50, 100 property portfolios. They're very considered and they're very, very average. They're thinking 2, 3 properties, maybe 4 properties, and that is average. And that if you fall into that, that definition I've just sort of spelled out there, that's the majority of property investors in Australia.
Yeah, 100%.
That's the majority. So and it's cool. So you enjoy being a buyer's agent?
Yeah, love it.
Yeah.
Look, I think it's a privilege to help and guide people into making smart decisions when it comes to investing. I think there's a lot of noise, there's a lot of misinformation in the market. So
Heaps.
I think if you have that experience, which we do, it's just giving genuine advice that that doesn't come with a ton of bias or anything like that. It's just giving advice that really suits that particular client.
And have you got another property startup in you somewhere, venture capital backed startup?
Oh, look, you never say never, but look, I think for now it's just continuing to build what we've created.
Yeah, great.
And help as many people as possible. But I guess it's just not just probably capping at some level. We don't want to. I think for me, lifestyle is really important too, and I think that's a business that this has created as well. So, and that goes for our entire team. That's crucial. So it's not about just growing for the sake of it.
Yeah,
that's for sure.
No, it's good. No, it's nice to get insights into BFP Property Group, and no doubt you can just track you guys down just by googling you. But mate, the reason why I got you here is to talk about regional locations. But it's good to get a sense for how you guys are aligned. So let's get stuck in it. We'll just go to a quick break. Stay with us. Back in a moment. G'day, welcome back. Phil Tarrant for Smart Property Investment. Having a chat with Ben over at BFP Property Group. Now, Ben, your top regional locations for 2025. Let's define what regional is first, because different people have different views of this. How do you what's your sort of construct of regional, to give us a frame of reference? Yeah,
you're right. Yeah, I think when people think regions, they think some sort of rural town out the middle of Whoop Whoop or something like that. Yeah. But look, it's an urban centre that is located outside a large metro capital city. For us, it's typically 1.5 to 3 hours outside of a major capital. But it's a city that has its own strong economy. It's got infrastructure. It's got a growing population, and perhaps it's supporting a larger kind of rural area around it. So that's kind of the simple definition of a regional city. Some people think it's anything but a capital city. I guess there's a bit of merit to that, but for us, it's all about the economics of a city.
So based on your definition, and I'm a really simple guy, so I've got to simplify things for myself. It would be, it's not a metropolitan area, but it would be cities that have characteristics of a metropolitan.
Correct.
economy.
Absolutely.
Yeah.
It's a better definition.
Yeah. So all the stuff you'd expect
Correct.
in a big metropolis, but it's smaller and it's not a capital or I guess in New South Wales you would have the Sydney, Newcastle, Wollongong would be your metropolitan areas, and everywhere else will be.
Yeah, look, I think there's the way it's going at the moment. I think that's probably Sydney is growing,
Coast, maybe.
But Newcastle's typically, if you're looking at statistics and data, it's classified as its own, regional city. But you go out further west to places like Orange or Dubbo, Albury-Wodonga, Wagga. These are large, sophisticated regional New South Wales cities. So that's the kind of what a regional city would look like in my eyes.
So you'd travel far and wide across Australia looking at regional cities? Is that something you like to do?
Yeah, we do. Yeah, absolutely.
Yeah.
So we've got a team that's scattered across the eastern seaboard.
Okay.
So we get out of these areas. A lot of our buyers agents are based in these cities. So we've got a buyers agent based in Geelong. We've got a buyers agent based in Albury-Wodonga. So we get into the nitty gritty of those particular cities. But then they can travel out to different markets in that area as well. So we're seeing phenomenal growth in these particular cities. Not everywhere, but there's certain ones that do perform well, and there's some really interesting data that says over the last 10 years, your combined regionals actually outperformed your combined capitals. So I think it's an education thing for investors, but it's definitely something that, as an investor, you should be considering. It's not suited to everyone's portfolio, but for those that perhaps have a lower entry price or they need a sharper yield, then by all means, it's definitely something to consider.
Yeah, there's a lot to it. And there's always a good debate, sort of metropolitan versus regional. And the best investors I know have a very sort of balanced and diversified portfolio. You typically see some regional stuff in there, but based on those stats you just provided, which probably like Core Logic stats or something similar, the performance of regional markets, is there a handful of regional, or is there a sort of a segment of the regional markets that outperform other regional markets, and that sort of gives great weight to shaping those sort of return numbers? Because there's a lot of regional markets you wouldn't want to be in.
Correct.
And a lot of people have invested in these regional markets, which may be sort of single economy, and they've blown their dough. They might be mining stuff. So, not all regional markets are created equal.
No, 100%. Yeah. So the data that's, in the hedonic Home Values Index, it's all aggregated. So, you'd have to get into that detail to see what's actually driving, those returns.
So what is it, and there is a thrust towards regional investing, and you have and you have nots. There's a big debate around this, and there'll be certain people that say never ever touch it, right? But Australia's a big place. What do you think's behind a growing sort of investor interest in sort of regional markets or regional real estate just in general?
Yes, I think the first thing is entry price.
Okay.
So if you're a Sydney sider and you're looking to buy an investment property, and Sydney, you're likely to be out of budget if you don't have $1 million or thereabouts to buy a freestanding Torrance titled house. If you go out into a regional location, look, for us, we usually work with clients with a minimum budget of $500,000, so $500,000.
Yep.
You can buy cheaper, but probably in a market that we wouldn't consider. So it's definitely opens up opportunities for a lot more investors that have a lower borrowing capacity or a lower budget. The other thing is the higher yields. Again, refer back to Sydney. Your yields for a freestanding house are pretty poor. It could be 3 to 3.5%.
If you're lucky.
If you're lucky, yeah. Look, you go out to the regions, it could be anywhere from 5 to 6% or thereabouts. So that helps with holding the asset long term, helps with borrowing capacity, and helps with people wanting to to buy a second or third, in a shorter space of time. But it just goes back to, you make an educated decision, pick the market that has a real good, strong track record of growth, and there's just so many that that outperform, beautiful Sydney, Melbourne, or Adelaide or thereabouts. So
and there's some really good overperformance in regional comparative to what you see in the capitals. Do you find most people get to a point in their portfolio where they may need some regional cash flow stuff to offset some properties they may be holding in the metropolitan areas, which might not be delivering the yields?
Absolutely. And that's what we've seen with a lot of our clients. A lot of our clients may come with an existing capital city asset, and especially with interest rates that have grown significantly over the last 12, 18 months, or 2 years. They've got the capacity to buy, but then it's, well, what do we buy? It's a matter of then pairing that up with something that is of more of a cash flow orientated asset to sort of cross out any negative that you've got in a capital city asset. So I guess it's a part of a portfolio strategy in my eyes, and I think there's always space for a regional asset in people's portfolios.
Is there any reason why you wouldn't go into regional markets as a property investor?
I guess in my view, not really, unless your risk profile says that I won't be able to sleep at night if I'm buying in Albury or Wagga or Bendigo, then okay, great. And if cash flow isn't necessarily a thing for you, then by all means you can buy really well in a capital city and So I think it's all around risk profile. So if your situation suggests that that's a risky approach, then they're great. You can always avoid it.
Yeah, there's certain cohorts would say you should invest in regional markets because it's not blue chip property, and this term blue chip gets thrown around a lot, which I'm not a big sort of fan of it because it implies expensive in traditional locations like the northern beaches or the eastern suburbs of Sydney. But there would be an argument that there is really good assets, inverted commas, blue chip assets in regional locations. If you have the right definition of what blue chip actually is, right? And there is some very expensive properties in rural and regional Australia.
Absolutely.
However, the sort of the typical property that someone would be living in a regional area or in a sort of suburban orientated things, there's a lot of commonality around it. So the product is cheaper, largely. However, you can still invest with a blue chip mindset in those regional areas. Albury-Wodonga, for those of you who haven't been there, is a pretty big place. And you've got very different suburbs there.
100%. Yeah, no, you're spot on. And I think the definition of blue chip is a bit of an unknown. I don't know if there's a clear-cut definition of it.
There would be blue chip properties in the bottom quartile.
Correct.
For example, there'd be blue chip properties in the upper quartile.
Yeah. I think perhaps desirability links back to what classifies blue chip and what it doesn't. And you touch on, Albury-Wodonga, there's definitely some blue chip areas in that city that command big prices, and the affluent in that city gravitate to and buy and spend a lot on. So I think your answer to that is, there's blue chip markets in any location, right? So there's always a desirable end of town and a dingy end of town. So I think it's just having that local intelligence to be able to pick out.
That's why you're going to be on the ground. So thinking those two bookends, right? The top of the market, the top of the price point, and the bottom of the price point. Where do you normally sort of aim and direct your buying?
Yeah, I'd say the clients that we work with probably range anywhere from 500,000 to $1 million.
Okay,
it's a big range, but that's where the bulk of our clients are transacting. So look, for those that have a higher price point or entry price or budget, then naturally we can go to more expensive or larger regional cities. And that's typically what we do. And we talk large regionals. It could be something like a Geelong, could be something like a Newcastle or down into Wollongong or into the Hunter. These are large, sophisticated regional centres that have huge economies, spitting out a lot of GRP, which is a gross regional product or economic output. And there's a good track record of growth, and there's lots happening, infrastructure being developed. Unemployment really tight. So they're the kind of markets that we might consider for a client that has a bigger budget. And for those with more entry level budgets, then we'd need to consider perhaps a suburb a little further out in a regional city. Depends on a whole bunch of things, I guess.
Yeah, and in terms of a frame of reference for the type of assets that you like in these regional locations, and we'll get into actual markets because I know this is what a lot of listeners are going to go, okay, it sounds great, but where? What do you guys like? Houses? You're looking for like land, large land blocks that you could do developments on? Like, give me a frame of reference for what constitutes good buying in these areas.
Yeah, so it's just very simple, freestanding houses on pieces of land, family homes on pieces of land. Land size, depending on location. There's a lot of locations that we can get some nice, larger blocks that we can subdivide the back or put granny flats in the rear. But only houses. Yeah, we don't buy anything else.
No units in regional locations.
No.
And how important is it in regional locations to be within striking distance of the high street where all the shops are and the pubs and the amenities and stuff?
Yeah.
Doesn't matter?
Not really. No, absolutely. So, and that's something that we get questioned on a lot. It's, if we've matched a client to a particular location and they say, where's the train station? So trains aren't used in these areas, right? So I think it's just understanding how these people live, the demographic, how that society functions, right? And, perhaps in Sydney, if you're not near a metro or a station, can be tough. But for some of these regional cities, it's, if you've got a car, that's how you travel around. So it is a big education thing. Absolutely.
Yeah. And so essentially you need sort of integrity in the house that you're buying, so you don't want it falling down. But is there any sort of must-haves when you're looking at this? Like, you know, it doesn't matter if you're not near the train station because who takes a train to the city, for example? Like, you know, do you got to be close to shopping centres or they're all close in regional areas? Like, you know, how do you, what wouldn't you want to be investing near or in or around if you're in regional areas?
Yeah, I think the same philosophy that we would have buying in a capital is relevant to a region. So avoiding busy roads, avoiding backing onto schools or shopping centres or commercial sites or something like that. So very traditional family homes in nice quiet streets that you know, are occupied predominantly by owner occupiers. Again, it's the same way we would invest in a capital. I guess there's a few quirks with buying in some of these regions where the house in particular, you've got to make sure that you've got heating and cooling, evaporative cooling in a lot of these cities because your winters are ridiculously cold. Your summers are quite dry and hot. So things like you know, heating and cooling to a certain degree is really important. But buying in these areas, they traditionally comes with a bit of maintenance from that perspective too. So it's just being mindful of you know, of those kinds of things.
What about property management in the regions? Is it easy to get a good property manager? Do they charge more? Do they operate differently, or is it largely all the same?
Yeah, very similar. They do charge more. Yeah, absolutely.
Okay.
So I think Sydney's historically the cheapest area for property management, but you go out to some of these regions, they can be upwards of 7, 8, 9%. So it is quite high. In terms of finding a good one, yeah, like everywhere, you've got to really understand who's the best PM in town. So for our clients, we typically refer them on to 1 or 2 or even up to 3. You know, interview each of them. We give them our suggestion, and then it's picking the right one. But yeah, from a cost perspective, it definitely is a little higher.
Yeah, and it's all the stuff that you need to consider as a regional investor, and no doubt you do a lot of strategy work at the front end and work through all these numbers to determine what constitutes good or bad or connected with someone's strategy. In terms of locations, and we've got to remember that I was only chatting with someone from Cairns the other day, and again, I gave the anecdote for our listeners and our viewers that the distance from Brisbane to Cairns is the same as the distance from Melbourne to Brisbane.
It's huge, yeah.
Like
big city,
Australia's a big place, right? Like it's a really, really, really big place. So there's so many regions to choose from, and a lot of people sort of just get bamboozled, bewildered by the fact of like, how do you actually identify what constitutes really good investing in regional towns when you've got umpteen number of states and umpteen number of different regions and umpteen number of different local governments and umpteen number of different ways that people manufacture money and live in these regional areas. So it can be tough, but let's give our listeners some actual locations. We'll just go to a break, a bit of suspense. When we come back, we'll get stuck into that back in a moment. Welcome back, Phil, from Smart Property Investment, chat with Ben over at BFP Property Group. Now, 5 locations for 2025. You're going to give us the skinny on where they are. Like a lot of buyers agents they'd be holding on tight, saying, "I'm not telling you."
Yeah.
But again, there's 2 schools of thoughts of that. There's so many different locations, and everyone's got a view on it. You tell someone where they should invest. That's a location. Obviously, we have our Fast 50 report, which tells you what all the experts say. Knowing where and then doing something about it are 2 very, very different things.
Yeah, 100%. And that's what I've found too. I think clients don't necessarily come to us for those specific locations. They're coming for the time saving and the support and the guidance, I think. So in terms of sharing locations, yeah, there's no issues with that.
So let's start with some of these locations. Give us number 1.
Yeah, so I think they're not in order of preference, and some of them are very different in terms of size and scale. But the first one I've got here is Albury-Wodonga. Yep. So down in the New South Wales Victorian border, the old Murray River breaks it, goes through the centre of it. So it's the 20th largest city in Australia.
Is that the 20th largest city?
Yeah. So it's got a population combined, so the twin cities, both of them, of around 100,000, and it's earmarked to grow probably up to 150,000 in the next 10, 15 years.
Has it got 2 governments? Or is it?
Yeah, so I think there's a bit of, yes, you're right. Yeah. So even dealing with real estate agents in Albury, They've got to be licensed in the Queensland side, and it can be a bit of a painful
New
process.
South Wales side, New South Wales and Victoria.
Both, So
well,
it can be complex,
Yeah.
but I think it's just one of those things that they've just grown up and dealt with, and they move on.
So why Albury-Wodonga? What do you like about it?
So it's got a real strong, stable population base. It supports about 50,000 jobs. It's got a GRP, so for those that aren't familiar with that, it's gross regional product, so it's economic output, about 7.6 billion on an annualised basis.
So that area contributes $7.7 billion to the national economy.
Correct. Yeah. A mix of industries. So again, a big thing of when we're selecting a regional location, we want to understand that there is multiple economic drivers, multiple industries that support jobs, etc. So for something like an Albury-Wodonga, you've got multiple, interest sort of industries propping up jobs and supporting economic growth. Vacancy rate, so when you're getting a tenant in place, this place historically is around 0.5%.
Okay.
So
it's tight.
Very tight.
Yeah.
Very tight. So we had a property that settled in Albury yesterday. We had the property manager take a tenant through at 5 o'clock yesterday, and they got an application by 7 o'clock that evening. Again, that's just one example, but like good properties lease extremely quickly.
And it's just families in just demand.
100%.
Yeah.
Families, mostly families.
Are they locals who are sort of born and bred, or are they sort
Yeah.
of coming in for work type people?
Yeah, look, I think there's, again, my understanding, and again, I rely on my buyer's agent down in Albury, Lisa Wood, but I think there's a lot of people that, would grow up in places like Albury. They may go to Melbourne to study, but then when they're ready to have a family, they typically come back.
home.
So, which is quite interesting. Infrastructure. So again, looking at these types of cities, we want to see that there is investment, both public and private. Albury-Wodonga is part of the $31 billion inland rail project. Again, that's a project that's been going around for a while. But
So the inland rail project is moving goods
correct.
on rail inland.
Yeah, from
Yeah.
Melbourne up to Brisbane. It meanders through a whole range of key regional cities through Vic.
So it's transport infrastructure.
100%.
Yeah.
Yeah. There's a big hospital redevelopment in the city as well. So yeah, that's the first one off the rank.
Albury-Wodonga. I'd be thinking out loud what the key industries down there would be. Probably healthcare.
You've got healthcare.
You've tax offices down there.
You do, yeah. You've got defence, so they're in
Defence is
Bandiana on
there.
the Wodonga side.
Yeah.
You've got two universities on both sides.
Yeah.
Construction is quite high. Transport, so it is the hub between sort of Sydney and Melbourne, so it has all your large transport.
All roads lead to
freight
Albury-Wodonga.
providers. Yeah.
So I suppose I've got a mate that lives down there, and it's
The-
great access to lots of things to do on
Yeah.
the weekends. Very livable city.
It is, yeah. The next one I got is Toowoomba,
Oh yeah.
regional
Toowoomba.
Queensland, hour and a half or so west of Brizzy.
Straight west, isn't it? From
Yeah.
memory. Yeah.
So it's the 16th largest city in the country.
Okay, Toowoomba.
So it's a bit larger than Albury-Wodonga.
Does Qantas fly there direct?
I believe so.
Because I know Qantas Link flies to Albury-Wodonga.
And
So-
Rex.
yeah, and Rex.
Yeah.
Well, Rex still going? I guess
think-
it's in
yeah.
administration. But
I always fly Qantas Link, yeah.
No, it's but that's another good indicator, right? Like give you a sense for the size of a.
Yeah, so you can look at incoming passenger numbers in terms of how many people
If you're going to crunch it that hard.
come and go into the city, but it's got a very large regional airport, Old Albury. But Toowoomba again, 16th largest city in the country. Population is 184,000 people thereabouts,
Okay.
so it is a bit larger than Albury-Wodonga. It's a
So
major.
to give some sense for that, like what's the? Do you know the population of Darwin?
It's about 250
About
from
250.
memory.
Yeah, so they're big cities.
Correct. Yeah,
They're
they
big
are.
cities.
They are big cities.
Yeah.
So Toowoomba's got a gross regional product of 16 billion.
Okay.
Again, across multiple industries, health and educational. It's a major health and educational hub in regional Queensland. It's got a university. It's got it actually supports all the surrounding farming areas.
Yeah, big agriculture out that way.
Big time. Yeah, it's huge. Current vacancy rate is one of the tightest in the country. Again, about 0.5%.
See, a lot of people look at that and say the real estate market's broken there if the vacancy rate's only 0.5%.
Yeah.
Something like that. Good if you're an investor.
Yeah.
Yeah.
Well, yeah, correct. Yeah.
Yeah.
Well, so there's incoming supply is just in existence. So these types of cities have very low levels of incoming supply, which just props up. Demand will always be strong. It's it'll always support it. It's also on the Inland Rail project freight route as well. Big hospital redevelopment and $1 billion, I think, to the tune of redeveloping that hospital. And I've got a fun fact here: 42% of dwellings are rented, investor-friendly mix. So again, it's
42% are rented.
Yeah. So you got closer to that 60% mark is owner-occupied, and that's a nice mix too, right? You want to invest in a city that is dominated by owner-occupiers as opposed to investors. So that's another one that look, it's probably at the fast approaching its peak of the market. So I think investing in a market like that, go ahead with caution.
So why would to that point, why would buying an asset in that area be a sensible thing to do? So if it's sort of reaching the end of its current cycle, no doubt the yields are probably pretty strong. You'd be parking dough in there for cash flow.
Yeah, it could be. Yeah. And I guess, look, in terms of what's your investment horizon? If you are looking at investing for a long period of time, 10, 15, 20 years, look, buying into a market like this, you're going to do relatively well. Yeah. It's always a bit iffy of trying to time a market cycle perfectly. But look, it might not be the first one that we'd be putting clients in. We probably haven't bought there for a little bit of time because of that fact it has kind of reached its or close to peak, and it's good to look elsewhere.
Does Toowoomba flood? I know Albury-Wodonga has its challenges with flooding, and no doubt that would be something you'd need to be, because a lot of these regional towns flood for some reason. They're always on a river.
So back to Albury, the Murray River does flood. So you've got places like South Albury. It's a big blanket no. And there's a few pockets on the Wodonga side that you'd need to avoid. Toowoomba as well, it's a city perched in the middle of a floodplain. So you've got to be really, really careful of really understanding your flood mapping and buying well and truly outside those flood maps.
Okay. Next location?
Geelong.
Yeah, home of the Deputy Prime Minister.
Deputy Prime Minister. I was going to say the Geelong Cats, but
So
12th largest city in Australia.
Okay.
So it's one of our bigger ones. Population.
Big airport there at Avalon.
I've mistakenly gone to Melbourne and booked a flight to Avalon, and you got to make the trek back into.
It's a bit of a hassle.
To pain, but about 290,000 people, so it's quite large, and supports about 130,000 jobs. The median house price has doubled since 2013, but a lot of that. It was well and truly quite some time ago, because
it was early on and it just plateaued, right?
That's right. So since COVID, Geelong, in line with broader Melbourne, hasn't done much.
There'd been an argument of like a parallel of Melbourne to Geelong as Sydney to Newcastle.
It is,
it's like Geelong is it's a metropolitan area, which just isn't in Melbourne.
It's probably a little closer than what Newcastle is to Sydney.
People commute from Geelong into town.
Absolutely. Yeah, absolutely. Its GRP is $21.9 billion, so we're starting to talk quite a sizable economy. Vacancy rates, again, hovering around that sort of 0.6%, 0.7% mark, so very tight in some of these suburbs that we're very active in. Infrastructure, $14 billion currently being spent across road, rail, port upgrades, renewable energy projects as well that we're seeing in the city. And I've got here 24% rise in remote worker relocation since 2020. So there's been a lot of people that have relocated back to Geelong it's probably that post-COVID period.
So people moved out thinking, and they went, no,
they've come back.
Not really practical.
Yeah.
It's an interesting stat, the remote worker relocation. Like, I don't know what those dynamics are elsewhere, but no doubt you see it in, there's this flight to regional communities during COVID, a lot of seaside type places. But I think the realisation of not living where you work or what your requirements of work are has probably changed quite a lot. So, it's an interesting stat to consider. But, Geelong is a large regional. If you've never been to Geelong, like, get down there. It's like being in a small capital city.
It is, yeah, absolutely. Yeah. Next up is really one of my favourites. It's Newcastle.
Yeah.
So you've got the 7th largest city in the country. We do a lot of buying up there. We've got a property management business up there as well.
Okay.
We've got 176,000 people in the city of Newcastle alone, But if you
Is that
take
the city of Newcastle?
City of Newcastle,
Okay.
but then if you
Yeah.
take Lake Macquarie and the Hunter, certain parts of the Hunter, it comes up to about 680,000 people.
So if you're going to draw a bubble around Newcastle, would it be sort of from like, I don't know, Lake Macquarie, Swansea? So Swansea, Belmont. To Nelson Bay?
Yeah, so
Yeah.
Nelson Bay,
Or Stockton,
so Port
yeah.
Stephens is classed in that sort of greater Newcastle statistic. And then it goes out to certain parts of...
Cessnock, would that be part of
I think...
Maitland? Maitland would be, I guess that's called the Hunter.
I think it might. But places like Thornton, Chisholm, the newer parts, definitely part of those stats. But the city itself of Newcastle quite large. But then if you capture those surrounding areas, it does become a very large centre. So we've got GRP of 24.6 billion.
So that sort of boundary is okay.
So it's a pretty big economy on its own, right? Vacancy rate, again, depending on where you look, anywhere from 0.5 to 0.8% in some of those well-established suburbs. Infrastructure, we've got plenty of investment in defence. Hospital upgrades. The Newcastle Port Logistics Hub's been recently upgraded. The airport, I believe, has also been
extending the runway.
And I think it's going to support Southeast Asia from memory. So
there's going to be a lot more direct flights up into Asia. Obviously, it's extending it also for the purpose of it's a big military base up there in Williamtown. But there's a lot of lot of direct flights out there now.
And the much talked about high speed passenger rail. When's that going to happen?
What's going on with that?
That's been talked about since I was a boy. But
it sounds like something's happening now, right? And this is an interesting point around the high speed rail. There's a high speed rail authority, which is a government body, and I think the guy who's in charge of it, the CEO of that, was the bloke who was in charge of the Sydney Metro. So they've got a real deal sort of executive in there now, and I think they're drilling holes in the Hawkesbury River to try and work out where they're going to dig a tunnel at the moment. But
that'd be groundbreaking, infrastructure.
Makes sense. Makes sense. And I think that's the first bit between, this idea of a Melbourne to Brizzy sort of fast rail. The first bit will be Sydney to Newcastle. So who knows? Who knows? But if you go and have a look around Lake Macquarie sort of, is the sort of estuary sort of just south of Newcastle. Like it's going nuts there. Like, new developments everywhere. It's really gentrifying.
Yep.
It was like a sleepy, place for retirees once upon a time, but now it's
definitely changed.
It's really shifting. Yeah. Really shifting in the gear.
Definitely. And the last one's Wagga Wagga.
Wagga.
So very similar to Albury-Wodonga. It's actually quite close. It's the 28th largest city in the country. It's very hot for investors at the moment. There's quite a few buyers agents that we've been competing with in Wagga Wagga of recent. Population of about 70,000 people on its own. You can see you get nice rental yields of circa 5.6 or thereabouts for good assets in Wagga. Supports about 36,000 jobs. A GRP of about 5.4 billion. Again across a mix of different industries. Vacancy rates anywhere as low as 0.3%.
Wow,
really tight.
That's really tight.
Very tight. Infrastructure, a lot of investment, both public and private at the moment. You've got 2.3 billion spent on the Energy Connect project, 2 billion in renewable energy projects, and there's also $1 billion spent in defence projects. There's a big defence presence in Wagga.
Yeah.
So that kind of it's a good robust market. Entry prices we can get in there circa 5 to 550, upwards of closer to 600. You get a better asset. You get tenants in at the drop of a hat, and they've sustainably grown over the last, say, 10 years, anywhere from 7 to 9% compound growth every year. Definitely a good option.
So there's good buying in all these regional locations you mentioned, sort of from $500,000 to $1 million. They're getting some good
absolutely. Stuff. Probably wouldn't go. Look, I think if you're going up to $1 million, it's probably a bigger city like your Geelongs or your Newcastles. For some of these smaller ones, we'd cap it a lot lower. But just as we were touching on earlier around, people always ask, how is regional Australia investing perform when you compare it back to capitals? But just these stats that I've got in front of me over the last 10 years, and this is from the April Hedonic Home Value Index, combined capitals have returned 61.7%, but your combined regionals over that same period, 87.5%.
5-year growth. Was it 5-year growth?
10-year growth.
Yeah, 10-year growth.
So it's
Okay. So pretty much
nearly
they've
25%
they've
better.
nearly doubled in regional locations. Yeah.
Correct.
Yeah.
Yeah.
And it's a big sort of collection sample from that, but it's obviously performing better. But buyer beware, right? You got to get the
100%.
location right.
Yeah, look, there's merit in investing in any capital city or regional city, but I think it's about, opening eyes and opportunities in, regional locations, considering that it would be a good option for everyone's portfolio, most people, and you're not just sort of, pigeonholing yourself to your capitals. There's a lot more potential and opportunity, outside. It's much easier to build a slightly larger portfolio when matching up areas like that have better yields, etc. And if your growth profile is still there, then it makes sense for a lot of people.
And long-term play for these locations is buy and hold. Would you be sort of really transactional in regional markets, or would you be looking for a longer-term sort of time horizon?
Look, we've had clients that have gone in and out in short space of times, be it buying, renovating, and then flipping. They've done reasonably well in that respect. A lot of clients have done sort of subdivisions, chopping off the back block or building a battle axe in the rear. We've had some clients that have been really creative and opportunistic, where they've done a little development and sold off some to have a free piece of land. Or it's for different types of investors. Granny flats also can be quite popular in some of these cities.
Well, those rental yields are rental vacancy rates are really low. So if you're manufacturing sort of more product through granny flats, I reckon that's not only get a big uplift on your yield, you're probably contributing to helping people out with some housing as well, right? Which is a pretty big deal.
Absolutely.
That's good. I'm very familiar with all those locations. I must admit I haven't travelled to some of them for a little while, but there's a lot of commonality in what you've mentioned from them. They've got vibrant, diverse economies. They're large cities. The demand for rental accommodation is strong. Not once did you use the term, it's a mining town, you should be there. So, probably want to stay away from
absolutely. So it can be, there's a lot of risk in picking the wrong one. Absolutely. Just talking about, risky regional cities, I think there's a lot of, evidence with, the boom bust of some of these regional cities where they are reliant on BHP or Rio Tinto still, pulling out minerals from the ground. And when they do, disappear, it's like, well, what happens to those areas? Even places like, Broken Hill, where, what happens in Broken Hill? I don't even know what kind of industries are out there other than mining, but you've got to be very, very careful of, picking the wrong type of city. And I even think, population, right? I think it's got to be of a certain population size, and you want to see that growing in the right direction, because that comes with, scalability, economies of scale, etc. You've got to be mindful of which one you pick.
Well, political masters will have us believe that the future is regional, and they're coming up with schemes to try and get people out to the regions and put some sort of a lot of the government capabilities in the regions to attract people in the regions. There's a big argument, you saw it take place through the last election cycle, about affordability for Australians, and a lot of that reality is that your money goes a lot further in the regional areas, both in terms of buying a house, but your livability and maybe the appeal of that. So you'll see the government's putting their shoulders behind regional investing. I don't know if there's any direct incentives yet around sort of getting people into the regions through housing. That'll be the next iteration of a first home buyers grant. You get more if you do in the regions, unless it's already there. Good policy idea, by the way, if you're not doing it. Anyway, no, it's good. Thanks for coming in. I like talking about regional Australia a bit. It sort of reconnects me with what's going on, and maybe shapes my, a lot of my investment thinking is still around the capitals. And so, I need some more in the regions.
Yeah, absolutely. No, it's opening up people's eyes up to different opportunities, and then make an educated decision and
make a call and get stuck in.
Absolutely.
Yeah. How do people track you down, mate? What's the best way to find you?
Jumping on the website, bfpproperty.com. All the stuff's there. You can book a call directly with myself if you'd like to have a chat. But the website's the best way. Okay,
nice one. Well, thanks for coming in. Thanks for sharing all those insights, mate.
Thanks
I
for
really
having
enjoyed it. I hope you enjoyed that. And more on regional Australia as we sort of pull apart the Fast 50 as well, where to put your money today for the best capital growth in 2026. So a lot of regional locations. And I think I'm going to sort of invest in one of these locations, just as a bit of an example for those people who are a little bit buyer beware around it. We'll get stuck in and see how we go. Remember to go and check out bfpproperty.com. Any questions, I'm sure Ben's happy to answer them and just have a yarn here. It's not a bad way to start. Thanks for tuning in, everyone, or whether you're sort of watching this or listening to this. Remember, please, those reviews, if you don't mind, if you can keep them coming, that'd be cool. smartpropertyinvestment.com.au is where you can find us. Just if you're a social media person, just look for us and you can follow us as well. Keep connected with what's going on. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.